Hey everyone, Casey Dimon here. We're talking about tax sales today in the state of North Carolina. Now, North Carolina is a tax deed state. In a tax deed state, the actual property is sold for failure to pay property taxes. This is different from a tax lien state where just a lien against the property is sold. So North Carolina sells actual deeds, or they sell the property. Now, there are a few different types of tax deed sales in the state of North Carolina. In order, they begin with what is called a tax foreclosure sale. At this sale, the property is sold with the opening bid being the amount of delinquent taxes, interest, and fees that are due against that property. It's a standard auction format where the person willing to pay the most amount of money will become the winning bidder. However, North Carolina uses a 10-day period for what they refer to as an upset bid period. During this 10-day period after the auction has concluded, another bidder can come in and submit a bid that is 5% higher than the original bid, or a minimum of $750, and they can become the new high bidder. Then the upset period restarts. Now, after that 10-day upset period is over, if there's no other bids, the winning bidder is granted a deed to the property. Now, properties not sold at the initial sale may be sold at a second similar auction known as a county auction. Properties not sold at either of the first two auctions may be held by the county as surplus properties and then purchased through a written offer process. The county auction and the surplus property sales are not subject to the upset bid that we referenced earlier, the 10-day period. Now, once a property is sold, there is not a redemption period offered to the defaulting taxpayer. The tax collector or tax administration office handles the tax foreclosure and tax sale process. Now, many counties do contract with a third party, which is usually going to be an attorney, to handle the auction process itself. The list of properties available for auction are posted in the local newspaper and are generally available online through the county's website. Now, some of the online lists will include some fairly comprehensive property information, while others might include, well, just the parcel number and not a whole lot more. Now, most counties will require you to be in person in order to bid or send an agent on your behalf, and generally speaking, the winning bidder will be required to submit a deposit, usually 10% or so, and then pay the balance once the deed has been recorded. However, be sure to check with the specific county that you're interested in for more details about their specific auction process and how they handle everything. To read the state laws when it comes to the tax foreclosure sales in North Carolina, head on over to Google and search North Carolina General Statutes 105-374. I really hope you've enjoyed this video, the breakdown of North Carolina's tax sale laws. For information on other states, head on over to taxsaleacademy.com and click on the state guide. Have a wonderful day, folks. Bye-bye.